Hey guys, you guessed it. Today we're going to be talking about support and resistance secrets. These are the same structure trading secrets that have allowed me to become one of the best known Forex traders around levels of structure and one of the most accurate, as you can see from some of the screenshots on your screen now. These techniques and secrets that I'm going to share throughout this video are things that I've learned over the past 9 years of my trading career that have been extremely beneficial when it comes to helping me profit around levels of support and resistance. Now, in this video, we're not going to be talking about buy at support and sell at resistance. We're not going over some of the more elementary ways of trading around these subjects, of trading around these structure levels. Instead, we're going to take a deep dive into three main topics. These three topics are, first, what are the real levels of structure you need to be paying attention to and why? I'm going to go over my top 3 structure trading areas that I've never shared before. Next up, we're going to talk about some of the most common mistakes that people make when trying to trade around support and resistance to help you avoid those mistakes yourself. And finally, we're going to talk about building an entry reason and a full trading plan around these levels of structure. So hopefully by the end of the video, you'll have everything it takes to be a structure trading badass. I'm going to go ahead and let the intro and disclaimer roll. If that sounds good to you, make sure you click that subscribe button below the video to the right hand side. Join the over 140,000 trader community we have at the trading channel right now. Click that like button for me and I'll see you directly after the intro. Welcome back, traders. So let's go ahead and dive right in by taking a look at the top 3 ways to identify structure levels that are going to give you the best opportunity to make a profit. If you've been around the trading world for a while, then you may have heard a couple of misconceptions. What are those misconceptions? Something like this. You may have heard that when a market is just put in a support level, that you need to be looking at that support level to buy, right? Well, that's not a very likely scenario. As we all know, if a market's trending, look at what it's doing. It's coming down to that support level, then continuing past it. Coming down to that support level and continuing past it. That's what happens when a market is trending. We always create a double bottom. We always come back to the most previous level of support. The same thing goes for resistance. You've probably heard that you need to be selling at previous resistance. Well, what's wrong with that? Well, when we're in an uptrend, that previous resistance level is going to be broken until the uptrend reverses. So for the first way, this is one of the more common ways, actually probably the most common way to actually trade around structure that is actually providing you an edge, is to trade what I call trend continuation structure levels. So we're going to label that with TCSL. This is way number 1. What is TCSL? Well, trend continuation structure level is exactly what it sounds like. We're looking for trend continuation out of structure levels. So initially, we would see something like this. This is what we need to identify the T. Just to identify this market being in trend, and don't worry if you're getting a little confused already, we're going to take a look at this in a chart in just a second. We need this 1, 2, 3 move. We had an impulsive move followed by a retracement followed by a break of that structure level before we can even look for the TCSL. Currently we have trend. So now we have the TC because we're looking for trend continuation. What's the structure level? If we're looking for trend continuation here, what we want to see after this 1, 2, 3 move is another move down that breaks below structure. Once we have another move down that breaks below structure support, this right here, we're going to back up for a second. This 1, 2, 3 classifies us as being in the TC or trend continuation. Once we're classified in trend continuation, our SL is coming after the break of this level of structure. Once we get the break of that level of structure, then that level becomes one of our major levels we look for trading opportunities. And that's, again, one of the most accurate ways to actually look for trading opportunities around structure. This is the most common way we're going to talk about. We're going to get into some more advanced ways of doing this here in just a second, but let's do this for an uptrend. So we would have something like this. A market moves up, pushes down in a retracement, pushes back up. Now we have our 1, 2, 3. After a 1, 2, 3, what do we need to see? Well, we need to see another pullback and break of resistance. That puts us into an actual trend. Now that we're in an actual trend, we can look at the TCSL. We can look at the previous level of resistance in an uptrend, and that level, that zone, is going to provide us with a possible trading opportunity because that zone is going to give us an edge over the market that we are looking for. That's going to be one of our high profitable zones. We call these OTZs, or optimal trading zones. So first off, we're looking for the 1, 2, 3 setup, for the trend continuation setup. Then we would be looking for another break of resistance like we get right here, and then that zone becomes our optimal trading zone, our TCSL right there. So the first way that we're going to be looking to identify high probability levels of structure in the market is this scenario right here. Let's go ahead and actually go down to a blank chart and take a look if we can spot one of these specific scenarios. Here on the euro dollar, we have a great example of our TCSL that comes in way of a push up, then a pullback, and then a break of this resistance level right here. This was our 1, 2, 3 that we were looking for. We then need another break of the highest resistance level. And once we get that break of that highest resistance level, this then becomes our zone that we are looking to trade in. And that's exactly what we get, is a pullback into that zone. The market then finds support from that zone. So at all times, this is what we're looking for. Trending markets classified by a 1, 2, 3 move. After we have our classified 1, 2, 3, we then look for a break of resistance. Once we get a break of resistance, that resistance becomes support, and vice versa for a downtrend. Let's see if we can find a downtrend example here on the euro dollar. It should not be that difficult. All right, so here, looking from the far left edge of the screen, starting at this swing high here, you can see that we have a downtrend example of this. We have a market that pushes down. This would be our 1 impulsive move. This right here would be our 2 pullback. This would be our 2nd impulsive move. After that, what are we looking for? We're looking for the market to break and close below this lowest level of support. So we get this pullback, we get a break and close below that level of support. Then what do we know? Then we know that this is the zone we're looking to trade in as an optimal level of structure, and this is exactly what we get. We get the market pushing up into that zone and then continuing in trend to the downside. So as you can see, 2 examples of this OTZ, this kind of TCSL area, trend continuation structure level, working out really well. 2 examples here on the daily chart of the euro dollar. And no, this is not one time frame. It can be applied to any other time frame as well. And that's just one of the ways we're going to be using to spot out key levels of structure that give us the best opportunity to make profit in the Forex market. Let's look at way number 2. Way number 2, let's just zoom this out a little more and get to the end of this. Okay, way number 2 is going to be what I consider and call a structure swap level. So type 2 that we're going to be looking for, and you can be writing these down if you would like to, is a swap level. What is a swap level? Well, a swap level, quite simply, is a level of structure that has acted as support and resistance before. Right here, we have support turned to resistance, or a swap in structure. Now, this is a very important step for this level of structure. This level of structure is only after we've continued in this initial trend for a while. So let's say we get a move like this and a move like this, and then the market starts heading higher. That's when we're going to start looking at this level to provide possible resistance. We'll do a bullish example of this now. So as for a bullish example, once I get this erased, what we would be looking at is a move up, move down, move up. Let's say that swaps here from resistance here, the swap to support. We would then need to see this market continue higher before pushing down. And then when pushing down, this is the level we would look at for possible trading opportunities to the high side based on this swap level of structure, support, and resistance. So once we get down to this level, we'll discuss entries later on in the video. This is where we would be looking for those entries. This is the second way we can look for high probability zones, high probability structure levels, is with this swap level. Now, I know that part was probably a little bit confusing, so for that reason, we're going to go ahead and head down to the charts and take a look at some swap levels we could have used for possible entries here on the euro dollar. So let's go ahead and take a look at that now. Here on the euro dollar, we have a great look at a swap level. Here we push up to a resistance level. We push down to support. We break through resistance. What happens then? We pull down, resistance becomes support. We then head a little higher. We make higher highs. We pull down, that resistance level becomes support once more. And then once that resistance level is broken through, this is where it's really important to pay attention. Once we're broken through that swap level, remember the swap, we have a swap here. We have this level as resistance, pushing above, and then as support, pushing up. Once we have that swap, we know that once we push below that level, that's the level we're looking at to provide trend continuation once we break below it. So we've had that swap, and then now that swap becomes our major level of possible trading, our high probability zone. We'll keep looking. I'll find a couple more examples here on the euro dollar of this as well. Here we have another example of a structure swap level. If we look right here, we have support pushing up to resistance, we pull back down, support here, we push back up to resistance. What is that? Well, that's a level in the market that is swapped from support to resistance. Now that we know that level swapped from support to resistance, we head lower, we consolidate a bit, but if we bring that line over, once the market gets back up to that swapped level after heading lower a bit, we actually find a great amount of resistance there, not only once, but twice from this level as well. And this is a good example of using that swap level as a possible trading area or a high probability zone in our trading. Now, that's our first two. What is our final way to look for optimal trading levels in the market? Our final way to look for high probability zones is going to be what I call the 3x tested level. And before we continue here with this 3 times tested level, guys, I want to make you aware that we actually have an absolutely free 3-part reversal training series. This is a series that will teach you a lot more about structure. If you're enjoying this video already, it goes into even more depth about reversal trading and the structure we use for that. It also goes into depth on an entire reversal strategy we use in the markets each and every day. So if you want one of our non-subjective strategies based around reversals, then all you have to do is click the link in the description labeled free reversal strategy. It costs you absolutely nothing. Put your email address in when you land on the page and I'll send it directly to your inbox. Let's get back to the 3x tested levels of structure. So 3 is going to be 3x tested level of structure. So with a 3x tested level of structure, it's exactly what it sounds like. We're looking for any level in the market that's, let's say, been tested 3 or more times, and we're waiting on the market to get back up to that level. So we have 1 test here, we have 2 tests support, and we have 3 tests here on resistance. So now if the market gets back to that level, it's a level we'll be paying attention to for possible trading opportunities. So that is our 3x TL or a 3x tested level. And guys, these are the exact 3 ways I point out really high probability structured trading zones, and I am one of the best in the world at doing this. So let's go ahead and go down to a chart and take a look at 3x tested levels now. If we place a horizontal line right here, is there something that you notice? Well, if you'll notice, this specific level actually has been tested once, twice, 3 times here resistance, 4 times here resistance, and pushing left, you can see that provides us with resistance here and resistance once more here. This is something I do almost every single week on YouTube videos as well. So go back through a few of our YouTube videos if you have any trouble understanding this concept specifically. Now, for instance, let's go ahead and actually talk about what I would be looking for here on the euro dollar when it comes to the next level that I'm paying attention to. The next level down, let's say, since we're currently in a downtrend. Well, the next level would be right here. And hopefully you can see why that's the case. This specific area has been tested once, twice, 3, 4 times, 5 times, 6, 7 times, and now if the market gets down to that level around 1.1133, that's a level I'll definitely be paying attention to for some counter trend bounces here out of the euro dollar. And this is how I normally use this 3x tested level of structure, is for counter trend plays out on higher time frames. So that's the third and final way that I spot out key and important levels of structure. Now, if you are feeling overwhelmed, have no fear. That is totally fine. You're supposed to. This is a lot of new information. Feel free to go back and rewatch this until you get a handle on it. And you also need to understand that until you practice this, until you put it into action and actually start using these levels of structure, it's going to be really difficult for you to grasp every concept we've talked about. My advice would be to study one at a time. So, for instance, if you are going to study one at a time, I would choose the very first one we talked about, the most common way, which is the trend continuation structure level. Look for a market that begins in a trend. 1, 2, 3 move shows you a trend. Wait for that market to break through another resistance level, the highest resistance level. Then use that zone as a possible optimal trading zone. Use that zone as a great area to actually look for profitable trades. Now let's move on. Now that you kind of have a gist of the ways we're going to be spotting out structure levels, let's move on to the most common mistake I see traders make when it comes to structure. The by far most common mistake I see in structure trading is traders asking me constantly, Steven, am I supposed to just trade based on the structure levels? And let me explain what I mean by that. This mistake means that you do not have a trading plan based around structure. It means that you expect these levels every single time they're hit to react, respond, and create a profit in your trading. That will not be the case. Just because I sit here and tell you trend continuation structure levels work does not mean that you need to place a trade every single time you see this scenario in the market. That's not a full trading plan. That's just blindly placing trades around structure levels, which wouldn't work for anybody. If I did that, it wouldn't work, and I'm really good at spotting these levels. That's not what I do. I don't just pick these zones. I have a full trading plan around these zones with entries, stops, targets, everything predetermined before I place a trade, and that's what I'm going to teach you to do right now. Let's go through one more common mistake, and this is something you may have been guilty of before. What I see a lot is traders go, okay, Steven told me that if a market's made a 1, 2, 3 move, then broke through this support level, that this support level is a major level of structure that should act as resistance now. So then they'll watch the market come up to that level. They'll literally place a trade based on some random entry reason they found on YouTube, or based around nothing more than the fact that I said this is a major level of structure. The market will do something like this, push down, they'll get really happy for a second, but their targets are right here. And then all of a sudden the market pushes up, stops them out, and they go, well, Steven was wrong. Structure trading doesn't work. None of this is true. That's not the case. You don't understand trading if you think that because you place a trade randomly, not based on an entry reason, not even having a set stop loss or target or anything else that's been tested through historical data, and you expect that just to win every time, then you don't understand trading. The problem isn't you're trading a wrong system. The problem isn't that structure doesn't work, resistance support doesn't work. The problem would be that you placed a trade randomly, not based on a set of rules that give you an advantage over the market. The reason I place trades like this in this zone is because I know the zone itself gives me about a 60% chance to win. I have entry reasons that increase those odds to about a 65% chance to win. That's why I'm placing the trade. I have a full trading plan built around it. So unless you do, don't go out and randomly start placing trades around structure levels for no reason at all if you don't have some type of trading plan. And just to show you what having a trading plan to do, here's a little clip of a Canada yen trade we just placed using the exact same things I'm teaching you right now. All right, traders, so we were finally entered in onto this Canada yen position. I'll keep you guys updated as it plays out. We'll also talk a little bit about this analysis as well. So we'll go ahead and do that in just a second. Welcome back to the Canada yen chart we were just taking a look at. As you can see, our trade was actually placed right here where these blue lines are pointing. This was the area in which that we placed the trade. And as you can see from the area in which that we placed the trade, the market did exactly what we expected, pushing up to hit multiple targets on this trade. And this trade, guys, was placed based on exactly what I've been showing you in this video. This was based around the structure trading techniques that I use each and every day in the markets that you're learning right now. So let's talk about it. Why do you think I was interested in this trading opportunity based on what you've learned from this video? Well, let's do a starting point from here. We have a push up. We have a 1, 2, 3 move. After that 1, 2, 3 move, what are we waiting on? Pullbacks into what? The previous level of structure resistance, because we know that we are in trend continuation, TC. Then what are we looking for? The previous structure level. TCSL is what this trade was based on. This is literally exactly what I used in order to place this trade. I looked for a TCSL, found one here on a 15-minute chart. Again, this is not time frame sensitive. It works on any time frame. When the market pulled back, I used a specific entry reason that I know gives me an edge over the market in this TCSL zone, and that gave me a winning trade and a winning opportunity that ended up hitting multiple targets. It ended up with about a 3-to-1 risk reward. This ended up being a really nice day trade. So, and more so a scalp trade on this low of a time frame, but it ended up being a nice trade, and that's just a trade based on what we're teaching you here in this specific video. Let's jump back to the video now. So guys, that's the benefit of having an actual trading plan built around levels of structure, built around this type of analysis. So that's the mistake that I see a lot of times. Now, what we're going to dive into now is creating entry reasons and really a full trading plan around levels of structure. Let's do that on a different chart. We've been staring at the euro dollar long enough. Let's go to a different chart now. Let's check out something good for trend continuation, which isn't a lot here lately in the Forex market, unfortunately. Right here we go. Canada Swiss. This is a pair we actually had a really nice trend continuation play on earlier this week, and we pointed it out in the Pro Trader Report, which is a report we do each and every week for members of the Pro Trader Report, one of our newest programs. Link is in the description. Not a sales pitch whatsoever. Don't click it if you're not interested, but this is from one of those Pro Trader reports. So let's take a look at this. And we're going to dive into exactly how to build a trading plan around this. What we're looking at is a trend continuation structure zone. Why do I say that? Well, based on what we just looked at in this video. We looked at, and before we even do this, I'm going to put a screenshot to the left over here of the Pro Trader Report so you can see that I pointed out this zone before the market came into it and has since pushed up over 100 pips. I pointed it out way beforehand using the exact skills I'm teaching you right now. So what happened here is a trend continuation structure zone. We have a market pushing up, pulling back, pushing up. This creates what? Our 1, 2, 3 move. After we have that trend continuation move, we wait for a break of that resistance level. Once we have a break of this resistance zone, we then know that zone is going to provide support later on, or at least we know we have a high likelihood of that happening. And the only reason I know that is because of the testing I've done. Take and test it yourself. Don't comment below later on and be like, these levels don't work because you tried it once and you're like the scenario we just discussed. You lose a trade and go, this doesn't work, and get mad at me. Go out and test it yourself, create a trading plan around it. Otherwise, you're not really trading, you're just gambling, and that's it. So we have a trading plan built around this, which means the market came into that area. We placed a trade based on that, and the market has since moved up over 100 pips or so. But how did we do that? Well, we make trades based around this zones very simply by creating entry reasons. So for that specific scenario, an entry reason that is possible, and not saying go out and do this, but I could say every time I get a doji candlestick after touching this zone, I go long. I do not do this, by the way. This is not an entry reason I actually use. I'm just stating a fact. This could be an entry reason. You could go as far as to say every doji candle, I trade when the market goes 5 pips above that candle with a stop loss right below it and a target set at my previous highs. You could trade using something like that. The point is, in these zones, you don't just place random trades. You create an entry reason, and not only an entry reason, let's use the example we just talked about of entering on a doji. Well, if we're going to enter on that doji, we enter the trade there. Let's say we have a stop loss based around anything. You can either do it based around ATR, which is the indicator up here that's not there right now. The indicator up here, you can do it based around a certain pip value. That's not what's super important. The important part is that you have rules for a stop loss. So you'd put a stop loss. Let's say your stop loss rules are 10 pips under that doji candle. You'd go 10 pips under the doji candle. That give you 27 pips on the stop. After you got the stop loss, you could put your target up at previous resistance. You could put your target set at a 1-to-1 risk reward, however you would like to place the target. The point is, what I'm teaching you right now is that you need to actually create rules and a full strategy around these specific scenarios. Now, after you have your strategy, let's say your entry reason is just dojis in this zone. That's not a great entry reason. Don't go out and start trading that randomly. Don't be the guy that goes out and starts trading randomly and goes, Steven, you were wrong. Be the guy that takes and tests whatever entry reason you want to use. There are so many videos on here on our channel of price action trading entries. There are tons of videos on YouTube of candlestick patterns. That's all I use for entries. I have very specific rules for candlestick entry patterns and price action patterns that I use, that I've added special techniques to, that give me a little bit more of an edge over the market that we discuss in the EAP training program. But when it comes to entries, all I use is candlestick patterns or price action patterns. There is no super big secret. So all you have to do is go through YouTube or wherever you want to go, buy a training course that has candlestick entry patterns, find an entry that you can spot pretty easily on charts, whether that's a candlestick pattern or a price action pattern, and start not implementing it with live money, but start testing it in these zones through historical data. Go through the market and say, okay, right here, we have a structure trading resistance zone. How do I know that? We have a trend continuation resistance zone, excuse me. Well, I know that because here I have a push down, a push back up, and a push down. That gives me a trend continuation zone right in here. Okay, well, when I get in that zone, this is just an example, I trade when I get an engulfing candle. Okay, well, I get in the zone, I get an engulfing candle. When I get the engulfing candle, now that you have your entry reason set, if that's what you decided to do or whatever entry reason you decide on, Once you have the entry reason set, you take and go, okay, well, now that I have my entry reason set, let me test for different variations of stop losses. Maybe you test for a 1 ATR stop. Maybe you test for 10 to 20 pips above the swing high, above the entry candle, whatever it may be. And then take and test different scenarios for a target. And if what if I'm saying out loud, if that sounds like a ton of work, trust me, trading is a shitload of work. That's what trading is. Nothing that you do, I don't care what you're trying to do to make extra money online. You could go out and try to create what are some Shopify store or sell stuff on Amazon. You could go out and try to start doing internet marketing. Anything you go out and try to do will take a pretty big learning curve and a lot of time on your part when it comes to discovering the correct way to do it. And that's what I'm showing you here. No, even if I was to give you my exact entry reason, you would not be successful if you didn't take the time to go through historical data and test that entry reason for yourself. There's no way you would have the confidence to actually implement it in and out throughout the drawdowns that I experience on a monthly or at least on a yearly basis. I experience drawdowns based on the strategies that I use that you would not be able to handle if you didn't have the prehistorical proof that it was able and capable of coming out of those drawdowns. You have to do the testing yourself. You have to do the work yourself. So test for different scenarios for the stop loss. Once you have that, your trading plan might look a little something like this. I trade, let's say, the trend continuation structure levels. I only trade, again, you only trade trend continuation structure levels like this, right? This would be our zone. And I only trade I only trade trend continuation structure levels when the market gets to those levels and gives me a doji candle. Or gives me, let's say, engulfing candle. When I get my engulfing candle, I use very specific rules for stops, which are whatever. In this, again, I've never tested this. I don't know if this is profitable. I'm giving you an example of what a trading plan or based around this would look like, because that's what I was promising you earlier in the video I was going to do. So this stop, let's say your stop loss is 20 pips. I have a defined rule. That's what you need to be taking away from this. You need a defined rule for those stops. Targets are, let's say, 40 pips, just to keep it super simple. This is giving me a 2-to-1 risk reward. So now you have the beginnings of a trading plan. You can sit here and go, okay, I only trade in TCSL, the trend continuation structure levels we were just talking about at the beginning of this video. I only trade in those levels when I get a doji candle, or when I get an engulfing candle, or combine them when I get a doji candle followed by an engulfing candle. You can be very creative with this entry reason. The point is not for you to take all this information and go out and start trading it. If you want to become a real structured trading badass, you have to take this information and go test it through historical data 100 times at least or more, per pair, per time frame, and see if it actually works. See how this actually plays out through historical data. That's the only way to become successful as a technical trader and to be confident enough in your strategy. The makings of this strategy, I trade TCSLs with a doji followed by engulfing candle. My stop loss is 20 pips. My target is 40 pips. Now that you have this, you have testable rules. You have verifiable rules. You can literally take and test this through historical data to see if it's actually profitable. I have a 2-to-1 risk reward. Let's say this comes out to be 50% accurate. If it comes out to be 50% accurate on your tested data and you still have a 2-to-1 risk reward, then you have a profitable trading strategy. You have an edge over the market, and that's all you need in order to trade. As long as you have good risk management and good discipline, is an edge over the market. So once you've created your edge, as I said, go through, test whatever the strategy you develop is. You don't have to use exactly what I have on the screen. It may not be profitable. More than likely it's not. So create your own edge. Use your own type of entry reason. Now, doji plus engulfing candle may be a good entry, but you're going to have to adjust for stops and targets for this to be actually a profitable strategy, in my opinion, from the testing and trading that I've done in the past at least. So after you have all of this done, you've tested this on 100 trades per pair. I'm going to abbreviate with PP, per time frame that you plan to trade. And let's say you have 10 pairs. Out of those 10, 5 of them performed at 30% accurate and 5 of them performed at 50% accurate. The only way to know that is by testing. And once you've tested and you you come to the conclusion that you have 5 that performed at 30% and 5 that performed at 50%, you discount the 5 that performed at 30%. You take those out of your currency pair portfolio for trading this strategy. You only trade what's called the optimized portfolio of the 5 best pairs, and the number doesn't have to be 5. It can be 6, it can be 3, it can be 10, whatever the best pairs that you have is. But the only way to know this information is by going through the market and testing through historical data. You find the 5 best pairs. You put them into a spreadsheet together, all 5. You put all 5 in a spreadsheet sorted by date, an ascending sorted. So it's sorted by date. So what you're going to have is every trade as if you would have actually placed it in real time. Once you have that, you're able to calculate your max drawdown. I'm going to abbreviate that, max DD, MDD. Once you have your max drawdown, you can start adjusting for a risk management plan. Again, this may not be what you want to hear. This may sound like a shitload of work to become a profitable trader, but that's exactly what becoming a profitable trader is. And I don't want you to be misled by the guys running ads about Ferraris and living in these penthouse apartments and claiming that trading is easy. Driving a Ferrari and living in a penthouse apartment is completely possible through trading. If that's something I was going after, I could do both right now. I could have both, and the reason is because of trading. But I'm not going to sit here and tell you it's as easy as the snap of your fingers. I'm not going to sit here and tell you it's as easy as 1, 2, 3 and you're going to be there tomorrow, as long as you follow my super secret system and strategy. Trading is hard work, even if you get a course. Even if you decide to enroll yourself in the Pro Trader Report, which is one of our programs, or the EAP. Whether you decide to enroll in those or not, trading is going to be difficult, and this entire process that I just discussed is still necessary. The only thing that changes is you have a professional trader showing you the path so that you don't have to necessarily test for a bunch of different entries. I've already tested tons of entries, and I know the ones that work best in the market. You don't have to necessarily create the entire strategy. I've already created strategies. All you have to do is take them and test them. It's kind of a plug-and-play system whenever you take a course like that. So, with that being said, I hope this video has been valuable. I hope that it hasn't scared you away from trading, because the benefits, I know I've talked a lot about the negative side and how difficult trading is, but the benefits of being a consistently profitable trader are freaking amazing, guys. You're able to provide any kind of financial lifestyle you want to, all from the convenience of a laptop. And that's all you need, and it's an incredible thing, but it does take a lot of time and a lot of effort. But right now, what you have is the step-by-step process. If you didn't follow it all the way throughout this entire video, I know it was quite a long one, go back and rewatch it. I have laid out the entire step-by-step process of building a profitable trading plan around structure. Everything you need, you now have to become a structure trading badass. I hope you use it. I hope it benefits your trading and helps you create profits. If you are interested in the Pro Trader Report or any of our other paid programs, the links for those are in the description. The Pro Trader Report is where I point out these OTZ, optimal levels of structure. We also have another full training course on structure levels like this in the members area for the Pro Trader Report. The link for that is in the description. It's extremely inexpensive. It'll cost you less than going out to eat for dinner tonight, and you'll get monthly my trading areas that I'm looking at as a professional trader and as one of the best structured traders in the world. Again, interested in that, links in the description. Make sure you're subscribed. If you're interested in even more advanced training, the EAP link is in the description as well. I don't think I've left anything off. Make sure to like the video, share it with friends if it was helpful, and I will talk to you in the next video. See you later, guys.